What did you think of today's numbers?
Right on target. We're just consistent with where we've been in the past. The number I always look at, as we talked about in the past, look at the past 3 months of job growth, 185,000. That's still about 50,000 above what we need to keep up with population growth. So tells us we're still in recovery mode, but we're getting close to the top now. The other quick thing I would mention is go ahead. The only negative I was going to say, Rick, is that the employment rate, which I love, has dropped a couple of percentage points. We'll follow that over the next month or two.
Now, I was really excited, Ed, over the wage pops year over year and month over month. And the discussion really seems to beam down on the notion that deficits are rising, taxes are lower, and this is a problem. If you want a good economy, do what makes it run best, generate the most money, and then spend it any way you want. I think that right now we have this really crazy debate. If taxes make the economy hum better, I don't have a problem with where the money's spent, but I don't like deficits.
Well, I don't like deficits either, but, I saw your earlier discussion, and the one thing I would comment on, I actually have done some what I think is serious research on this. And what one finds is that spending rather than deficits, it's actually the spending level that is the negative effect on growth. I think that's what you were talking about this morning. But if we keep spending, if we keep increasing our spending, no matter how we finance it, if we raise taxes immediately to finance it right now, or if we put it off and borrow and then raise taxes later, it's still going to hurt growth. So spending is really the issue, and that's true across a large number of countries, developed countries in the world over a long period of time.
Now, pursuant to that, I look at interest rates today on the move. And I remember clearly on February 2nd, you and I talking about the same 2.9 that was revised away. The world really paid attention to that. It put inflation, break-evens, deficits right in issuance and center stage. Rates are moving up today. If this one doesn't get revised, I think this could be a big catalyst for rates to once again cross 3%. Your thoughts?
Right. Well, we were worried about that. We talked about inverted yield curves and a variety of different things. Most of the things in the economy, as we look at it right now, are still looking pretty strong. Obviously, the GDP growth was a good number. The labor market is still good.
Have you seen the latest reads? Atlanta is like at 4.4 right now, the Fed. St. Louis Fed's around 4.3. And this isn't like the first month of the quarter. Third quarter, we only have 3 weeks left. These are solid numbers. Continue.
That's right. That's right. And actually, if you look at it for a longer period of time, not just next quarter, but if you look at it over the next year, the market's basically forecasting about 3.5% growth right now. So over the next 4 quarters,
how much money we talking? Everybody I was debating this morning wants to mix their metaphors. You talk about spending and deficits and the benefits of tax reform. They say, but you spent all this on defense. I wasn't talking about defense. How much extra money between a 2.25% GDP economy and a 3.5% GDP economy are we talking, Ed?
Well, the economy is $20 trillion. So take 2.5%, 3.5% of that, and that's your number. These are big numbers, but the main
big
point,
numbers.
I think,
we're out of time, Ed. We're out of time. But my main point is generate more money, Congress, spend more money, Congress, but do the right thing to make the economy hum along.